card fees and sky-high interest rates, you might be wondering where you can turn to get a little credit. Well, credit union credit cards might be an option for some. Here to help us weigh the pros and cons is the watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
Okay, so let's go over the pros first, okay? So they have lower fees and interest rates. We're talking about if people decide to get credit union credit cards. Many credit card union cards don't have those balance transfer fees that are annoying to a lot of people, and protection against negative changes.
Well, also as well, you know, when you're dealing with these types of companies as well, I got to give you, my whole modus operandi is going against the big banks. I've been doing it for over 10 years now, attack them for the way they handle people's brokerage accounts and this going forward. But this is good stuff. I mean, you want to have lower rates. Obviously, you don't want to be carrying credit card debt, but if you have to do so, you obviously want to carry it at a lower rate.
Of course.
I think some of the actual cons, people actually think that they can't get a credit union account, but that's not the case, because if you live in a certain municipality, whatever it may be, you're able to get it.
Okay, let's talk again about the difference between a credit union and a bank. For people out there that go, hey, maybe it would be a good option for me to get a credit union credit card, but what the heck is the difference?
You have to become a member. It's kind of like you pay a membership fee to become a member of a club, and you actually have part ownership in that credit union. Obviously, you don't do that. You don't stock in a bank, but it's not the same thing. Falls under different guys. You're not having the protection, whereas the FDIC, but it has its own separate protection for your capital as well.
Okay, so we talked about some of the pros. Let's talk about some of the cons. Is it a hassle to get a card with the credit union?
I think it's a little bit more, they're going to be a little bit more stringent than some of the big banks, quite honestly, because they're not as big. They don't have many people involved. So, yeah, it's going to be a little bit more difficult to go ahead and get the card, but the rates are cheaper. Okay,
and another thing for some, not as many rewards, the customer service windows smaller.
Yeah, I mean, a lot of people, like myself, for instance, you know, I pay off the bill every single month. I like getting the rewards, so it may be a little bit difficult for me, or would want to be dealing with something like that. But for others, it's
many Americans are hoping to be singing a new tune in 2010.
I got a golden ticket. I got a golden ticket. I got a golden chance to make my way. And with a golden ticket, it's a golden.
The golden ticket. And believe it or not, a new study finds that almost 40% of poor people believe winning the lottery is the best way for them to get rich. But what does the watchdog on Wall Street have to say about this? Good morning, Chris. I think I know what you're going to say about this.
Oh, nothing gets me angry when you pull into a convenience store, you're filling up on gas, whatever it may be, and I see people buying lotto tickets. It drives me nuts. It's like, here you go, I volunteer to pay a tax.
Yeah.
It makes no sense.
Okay. What is it about the lottery, though, that is so luring? I mean, why is it? Is it just that get-rich-quick thing? Is that what it is?
Well, I think that's a part of it. You know, they pitch it, you know, dollar and a dream type of a deal. I mean, the same reason, I guess, why people go to Vegas and, you know, think that they can go about winning. I never understood it. I see, you know, I take a look at numbers. I'm a numbers guy. What are your odds of winning? Wouldn't there be better things that you could do with that dollar? Yes, I own it. No, it's a dollar, but you brought up the number here. We're talking about this is why I've got the computer in front of me right now. On my website, I've got this thing called the Magical Compounding Calculator. Use it, okay? If you say you spent, what, $10 a week?
A lot of people that claim, I have no money to invest, right? I make very little money, but they spend $10 a week on lottery tickets. That's not a lot. That's $500 a year.
Okay. $10 a week, monthly contribution, okay, zero initial balance, basically on average a 6% yield over a 20-year period of time. Your $10, rather than buying lotto tickets, is going to be worth close to $5,000 in 20 years.
Right. And that's money that's going to be down the drain, okay?
So much. You know, like I said, how many people know lotto winners?
Right.
Not many. I mean, it's just the chances of winning are slim and none. Why not take that money, save it, do something?
All right, well, there is no question many Americans are hoping to be singing a new tune in 2010, looking for that golden ticket. You know, like in Charlie and the Chocolate Factory. Well, believe it or not, a new study finds that almost 40% of poor people believe winning the lottery is the best way for them to get rich. I have a feeling that the watchdog on Wall Street, Chris Markowski, has some different tune to sing.
Whoa, yeah. That bothers me a great deal. It really does, because it's unfortunate. You know, the things we try to teach our kids in school, You know, Econ 101 when they kind of gets, you know, shoved out the back door because this is, you know, it's not that hard.
Well, and see, here's the thing. I mean, I'll be somebody, you know, every now and then, you know, maybe once every 6 months you walk in. Yeah. Thinner. And you take $1 and you go, I'll take the shot at $250 million. But the sad part is there are so many folks out there, and you understand the compulsion, the attraction to it. You know, they'll get rich quick. But a lot of people that don't have very much money, spending 5, 10, 15, 20, sometimes more a week on lottery tickets, and just throwing your money away.
Literally throwing your money away. One of the things that I've tried to teach people a while is the importance of compounding interest. How you basically compound little gains over time and what they end up being worth. And we ran the numbers here, and I have this on my website at watchdogandwallstreet.com. We call it the Magical Compounding Calculator. We took a 30-year period of time, about a 6% average yield, starting out with zero money, okay? Yeah. $40 a month in lotto tickets.
$10 a week, $40 a month.
Okay. In 20 years, $18,400. In 30 years, $40,000. That's just by eliminating buying the lotto tickets and by saving your money.
Yeah, and it does take that kind of discipline. You know, I think so many people get caught in that trap of thinking that this is the only way that they're ever going to see any gains. But it's, as you just said, it's just not so.
No, it's, you know, just saving money, putting away money over time, that rainy day type thing. I deal with my kids right now. They're starting to get into getting allowances and whatnot. Certain part of that money, yeah, you're going to send it. It's going to go to church and your charity. The other part you can keep to spend on yourself and things you enjoy. But the other part you're going to have to save. Okay.